Funding for Market Journal is provided by the Nebraska Soybean Board.
Animal agriculture is vital to Nebraska. Livestock production not only contributes to our food supply, but also helps our rural communities. Livestock provides revenue for schools, creates jobs, supports Main Street, and enhances the future for farm families. The Nebraska Soybean Board's Animal Agriculture Initiative works to encourage growth of responsible livestock enterprises to benefit agriculture and Nebraska.
Market Journal, television for making agricultural business decisions, is a presentation of the University of Nebraska-Lincoln Extension, where you can know how, know now. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Mike Briggs discusses strong margins in the feedlot. John Meuret analyzes corn and soybean markets before two big USDA reports. Jim Jansen talks about the latest survey values for Nebraska ag land. And Steve Mason explains how row spacing and seeding rates could impact corn yield. Mike Briggs is our cattle market analyst this week. While we've filmed in some admittedly unpleasant weather conditions with Mike over the last few years, our interview Wednesday was the first time we were forced inside. If you live in this part of Nebraska and experienced Wednesday's strong winds, you know why. In Omaha, the peak 5-second wind gust was measured at 60 miles per hour, and Lincoln recorded gusts at 56 miles per hour. With high prices, the latest sterling beef profit tracker shows it's not a bad time to be in the feedlot industry. For the week ending March 22nd, the average profit was more than $247 per head. Last Friday's Cattle on Feed report showed placements were 15% higher than 2013, a trend that was evident at the Briggs feed yard where Mike said his lots were full.
Yes, we're in really good shape. You've had a lot of placement opportunities that you probably didn't think you were going to have after the first year. Plus, there's been a nice availability of feeders, which was totally unexpected.
Where are those coming from?
That's a great question, because all you've heard about all spring is how bad the wheat was down south. I think there was a lot of feed bunk space this fall, and I think maybe some people had to cut some dryland corn for silage and they needed something to do. So I think there's a lot of backgrounded cattle out there that maybe people didn't know about or think about, and I think that's the way some guys were able to pencil out and be able to afford to have cattle.
Yeah, now if you're in it now, the margins have to be pretty good. How good are they?
Like we talked earlier, I've never seen, and people that had been in the business 40 years had never seen it as bad as it was the previous 2 years. And I, for one, have never seen it as good as it is. Profitability is excellent. If you had the cattle, it's working really well.
Now, he says with a smile. Now, are you starting to price some cattle as well?
We have started to price cattle. We kind of felt yesterday was a big cash trade. I don't know when you show this on Saturdays.
Which you watch all the time, obviously. It was odd that you asked me when this airs, but go ahead.
Always working. We had a big cash trade yesterday, so you had a big open in the higher open in the board today, and we just thought that was a good time. They were levels that were profitable. Take a little risk off the table. Now, those people that did that last fall, they're hating every minute of it because they've given away a lot of margin. We may have made the same mistake, but my concern with this market is, as good as the cash market is, it's at such a premium to the board, and that's because they've ran out of buyers. There is so much fund length, and we can't seem to narrow this basis. And the basis is going to have to narrow here because we're going to get into delivery. So is it cash coming to the board, or is the board finally going to go to cash? I don't know, but if it's coming down, if cash starts to relent and come down towards the board, there's so much fund length that when they decide to get out, this thing's going to get ugly really fast.
Well, some people are saying that on the crop side as well, and Monday we'll get a few big reports. Are you trying to position yourself one way or other based on corn?
I'm really going to stay flat because I have no idea what the report's going to do. I am, however, thinking about fading whichever way the report comes out. If it's bullish and we get a higher open, might be time to not buy any corn or sell a little corn. And if we open lower, might be time you better put a little bit in your pocket so you got a little bit of length. I think as we go forward, I don't hold a lot of hope for corn. unless it stays dry, and it's very dry.
But the numbers that we're seeing, the possible acres in the low 90s, what would that do?
Low 90s is going to be bullish. Now, if we come out with like what Informa and Bloomberg came out with yesterday at 93, I don't think that scares anybody. That's just 2 million less than last year. I don't think that's a big deal. You get down and, my gosh, if they come out with a below 90 or a 90 or a 91, that might make you a little skittish. It's gonna have to put more risk premium in the market because now you've got less acres and you don't exactly have favorable weather conditions right now.
Yeah, we're getting to that time of year where maybe you start thinking about grilling season and hoping that it helps you out on demand. Are prices too high, though, to bail it out this time? From
what I understand in talking to the beef board, they aren't. And I think it's just a simple fact that people like to eat meat. And the other thing that we're doing, 60% of the product that goes through retail is hamburger. People like hamburger. It's versatile, it's easy to cook, and that's really helping us. And the fact that there's not a lot of cow slaughter right now, so there's not a lot of cow meat to blend the hamburger down. We're having to grind up our ends. Well, that takes more meat off the market, but it's going into a form that consumer wants and is at this point willing to pay for. So from what I can see, grilling season could be really good. I don't care whether it's hamburgers or steaks. I think we're in good shape.
So going forward over the next month, would you say you're cautiously bullish in cattle?
I think that until proven wrong, I think the seasonal is still in place. I think we're in good shape till they get their Memorial Day demand covered. And then, gosh, with the placements we had last month, and I expect above normal placements again this month, it frightens me, quite frankly, because you are at such a high level, it's a long ways down.
While margins in the feedlot are extremely profitable, the Sterling Pork Profit Tracker says farrow to finish margins are the best they've ever been. For the week ending March 21st, the tracker listed margins at a gain of $103.60 per head. That's a new record for the second week in a row. Two potentially market-moving reports are around the corner this weekend. With that in mind, we also have corn and soybean market analysis this week with John Meuret from Meuret Grain Company. The USDA is scheduled to release its grain stocks and prospective plantings reports at 11 a.m. Monday. One of the numbers to look for will be the expected soybean acres. Farm Futures surveyed nearly 1,800 growers and believes farmers might plant almost 83 million acres of beans. Informa Economics sees the total at 81.2 million acres. Either of those numbers would easily set a new high. The most land ever planted to soybeans was in 2009 when farmers put in more than 77.4 million acres. The increase in soybeans would obviously come at the expense of other crops, including corn. Farm Futures expects to see about 92 million corn acres, while Informa is forecasting 93. We met John in Norfolk Wednesday, where again the wind chased us inside, and started by asking about continued strength in the soybean market.
You know, I think a lot of different reasons, Jeff, but the first one is stocks are still tight, and there's still real uncertainty on where these cancellations and when they're going to come from. And of course, I don't know if you follow the Brazilian story now, but you know, there's talk of some cargoes working into the U.S., but we need to see many more of them. And so the market never got to see the cancellations, and so there's still this unease in the market. And will we run out this summer is the big question.
Now we'll get a grain stocks number on Monday. How many beans do you think are still in storage here in the States?
You know, I think I'm going to be bold and say that I think they've missed the crop size on beans. Nebraska's a little bit different. We'll talk a little bit later about the rail demand, but we've been able to leave stocks of soybeans here in Nebraska, so it feels like there's going to be plenty to get along out here. I think they missed the crop size in the West, and almost everywhere you look, yields were better than expected. So certainly at points in the East, and there's places in Iowa where they certainly are going to need some beans, but out in the West and Northwest, I think there's ample supply.
And what are the farmers that are holding those looking to do with them?
You know, that's a good question. The farm marketing is always interesting, but if he didn't like 12 and didn't like 13 and he got to look at 14, I assume somewhere towards 15 or just the calendar is what will move the rest of the beans. And if he can get satisfied in 60 days that his crop's off to a good start, I think he looks to get rid of the rest of them.
Well, what about that new crop that's going to come in spring? We'll get an acres number on Monday as well. What number do you think would have a major bearish impact?
I think anything above 82 or 3 million is long-term very bearish. And the big question is, what do we pay attention to first? And I think when we get the stocks number, we're going to take a look at the acreage number and keep that in the back of our mind. But it might take some time to break soybeans, but there's no question in my mind we will. Last year, we really didn't break new crop corn until we got into late summer. and it was a very similar scenario. Very tight old crop stocks, but a very burdensome new crop acreage number. So I look for beans to break. I just don't know when.
How hard will they break?
I wouldn't be shocked to see beans at $8.50 or $9 come fall this year, and that's a pretty negative number. But if you're going to go from a carryout of 150 million bushel this year to 400 or 500 the following year, that is substantial to say the least. So,
Corn stocks, what do you expect that number to look like?
I think we're what, 1.5 billion bushel bigger than we were a year ago is what they're expecting. That is sizable. I think the market knows that, however. So I don't think there's any real surprise in the corn stocks number. More of the corn demand and the corn price has really been driven by getting the corn in the right place.
Right, I think that the analysts are expecting maybe somewhere around $7 billion on that corn number. You think that's going to be about right?
I do, Jeff. I don't think there's anything wrong with that. And again, like we talked in the soybeans, it's going to be getting the corn into the right place. And that's really been the issue this winter. The East has had a terrible winter. The river was froze up a lot of the time, and getting the corn to the right place was quite difficult.
On the flip side, what number would be really bullish for corn acres?
I think if you see anything underneath 91 or 2 million acres, you'll start to build a little story. And the story really isn't the acres as much as it is timing. Because the early crop, and they're doing some planting in Arkansas today, the early crop won't be off as a normal time, and so it'll feel a little tighter. So I don't know that it's long-term bullish, but I certainly think it can support us short-term.
With the beans and corn you have, I was reading some articles this week talking about how difficult it is or how expensive it is shipping rail and trying to find the cars for it. Can you explain kind of what's going on?
You bet I can a little bit. Part of the railroad a year ago, if we look back, didn't have much grain to move. The cash market all stayed very close. It went in the ethanol, went in the livestock that was here, and the export really wasn't a factor. We went from a crop that didn't need to be exported to suddenly we have a crop that's very large, burdensome, on top of a soybean crop that is generally exported, and the railroad wasn't ready. And so what happened is the price to get those cars went from about $200 or $300 a car to about $5,000 or $6,000 a car, which in grain terms it's anywhere from $1 to $2 a bushel above and beyond the normal price. And so that makes it extremely hard to get that grain where it needs to be, and expensive. And so if you find any place in the that's served by the Burlington Northern or the UP, you're going to see depressed cash values or basis values out here. And until they can fix the problem, we're going to stay very well supported.
Now, where are you going with these? Are you going west, or do you come east and south?
The grain from Nebraska generally will come east and south, and so it'll work into the California market and the West Texas market. Once in a while, we'll take some grain to the Pacific Northwest, but that grain should primarily come out of South Dakota and North Dakota, which, as you know, that's been a difficult area because they've got the oil in North Dakota. So.
All right, let's talk one more thing before we go. New crop corn and beans, where would you maybe start to think to be aggressive on this?
Well, I think, even leading up into Monday, I think you've got to take a good hard look at where your cost's at in both corn and beans. And if you know that you can produce it for $4 and you can sell it for $4.50, you need to take a good hard look at that. And I'd probably be somewhere north of 50% sold on corn and beans. You know my story. We're going to get cheap. And so if you can be 50 or 60% today, and certainly on any rally take advantage of it, I think you better do it.
Next week, we'll recap the stocks and planting reports with Roy Smith. To Ken and Leslie Boswell, being involved in farm organizations and promoting agriculture is vitally important. In the March Nebraska Farmer, you can read why. Leslie has just been elected to the Nebraska Farm Bureau Board and serves as a volunteer for Common Ground, an organization of farm women who educate consumers about food production. Ken is president of the Nebraska Soybean Association and is active in the Farm Bureau. The Boswells say they became involved because they believe in advocating for their industry, and they find the time to do so while farming corn and soybeans west of Shickley. You can read more about this active couple in the March Nebraska Farmer. UNL's preliminary report on 2014 Nebraska farm real estate indicates ag land values remain strong. The year-over-year increase from February 2013 to February of this year shows about a 5% increase in average farmland values. UNL research analyst Jim Jansen joined us earlier this week to discuss the numbers in the report and the survey methodology.
The Department of Agricultural Economics at the University of Nebraska-Lincoln has conducted an annual survey of rural ag appraisers, ag finance professionals, and people engaged in the farm management industry for absentee landowners. And this is the 36th edition of the survey. And in our annual mailing, we survey participants on the estimated value of agricultural land and rental rates across the state. And we also ask for them to report actual land sales that have occurred since February 1 of the prior year. And our values on the estimated side on the assessed value of land, as we have asked the survey participants to describe the values as of February 1, 2014.
As of February 1st, 2014, what are you seeing across all categories of ag land in Nebraska?
Across all of Nebraska, we had a moderate increase of about 5% to 3,195 for the average estimated assessed value of land. And that goes across different categories, including irrigated, dryland, crop ground, as well as rangeland or pasture.
One of the big increases you saw this year was in that category of non-tillable grazing land, up 7%. Reason being?
We have, based upon the opinions of survey participants and just general things we have observed over the last year in our department, it relates back to the strong feeder cattle as well as cow-calf prices on both sides of the board.
And what about cropland? Irrigated and dryland are obviously going to be different as you go across the state, but overall, what are you seeing?
Right. In prior years, we've seen an increase on the irrigated crop ground and dryland crop ground of around 20 to 30%. This past year, we're seeing it closer to around about 5% roughly. And I guess we'd probably say the crop ground, especially on the irrigated side, is more stabilizing and has seen a lot smaller of a movement in between this year and last year compared to the prior years. So overall, crop ground is pretty stable in our state, I would say.
So that's the value. What are you seeing in cash rates that people are paying for it?
If any of the viewers go out and look at our cash rates, they can see it's broke down into similar categories as our land value. On the crop ground side, we're seeing decreases of around 10 to 20% on the row crop ground, irrigated crop ground. But on the cow-calf pair rates, as well as rental rates on the rangeland and pasture, we're seeing very strong increases of that 15, 20, even 25%.
One of the important aspects of those cash rates would be how people are going about it. Are they doing it through flexible leases? Are they doing it through fixed leases? How are they going about it?
One of our questions on the survey this year goes back to what style of leases people typically participate in, and we're seeing the strongest responses on the cash, straight cash leases, where someone signs a lease and they're paid a certain amount at specified periods throughout the year. We're seeing a gradual reduction, especially on the eastern side of the state, on crop shares and cash leases with flexible provisions in them. Crop shares are a little bit stronger out west, especially in the western two-thirds of Nebraska.
So overall, to recap, there is an increase in prices, but maybe some tempering as well. Is that safe to say?
Right. The tempering of prices, everything kind of relates back to the expected cash value of grains this upcoming fall, and also the value of livestock. So where things are going to be headed in the future kind of relate back to our primary commodities here in Nebraska, as well as our expected interest rate for long-term land loans as well.
On our website, we'll link to the 2014 Nebraska Farm Real Estate Market Report if you want to see more information about your specific area of the state. As Jim mentioned, the numbers are determined through a survey. If you're interested and a land appraiser, farm manager, or ag finance professional in Nebraska, Jim says you can take part in future reports by contacting UNL's Agricultural Economics Department. With spring planting on the horizon, we're taking a look at corn and soybean issues that could impact yield. On our next episode, we'll look at the importance of soybean planting dates. This week, we asked UNL Professor of Agronomy and Horticulture Steve Mason to discuss whether corn row spacing and seeding rates should be adjusted based off current utilization in Nebraska.
According to USDA surveys, the average row spacing in Nebraska is a little bit over 31 inches, with 30-inch row spacing being the most common. Plant populations, seeding rates vary greatly across the state, depending primarily upon water availability through rainfall and irrigation, from below 24,000 in the western, more dry areas to in excess of 30 to 34,000 in irrigated or higher rainfall areas.
Starting with row spacing, how do growing degree days and solar radiation impact what you might do in terms of how far apart you space your rows?
Well, basically it comes down to what's the likelihood of getting a response and interception of solar radiation. Unfortunately, increased interception of solar radiation during early growing season doesn't always translate to increased yields at the end of the growing season. Most of the research would show that as we move further north in the United States, we get an increased response to narrowing rows. If you move south, actually less response, in some cases actually yield response to wider rows. And here in Nebraska, we're kind of right in the middle between the two of them in the battleground, whether there's a yield response or not.
And obviously row spacing is something that, at least at this point, farmers probably wouldn't make a decision on because of the large cost of equipment that you would need to make.
Right, and if you actually look at the research results, there's little consistent yield increase to narrowing rows in Nebraska environments, whether we talk about moving from 30s to 20s or moving from 30-inch row spacing to twin row type of spacings. So in general, row spacing is probably not a major decision to make in Nebraska. If we're at 30-inch rows, which is the most common and the close to the average in Nebraska, we're probably at about the best row spacing that we have with present production practices and hybrids that are available.
But seeding rates, can you find in studies that seeding rates maybe increasing would benefit corn yield?
That's an interesting question because seeding rates responses are not consistent across years or across production environments. So when we start talking about the average, of course the Nebraska average doesn't always work. Generally, studies that have been done show that much of the yield increase that we've had in the United States since 1930 time frame is not really due to increases in yield potential of corn, but rather is due to the fact that newer hybrids have improved resistance to crowding stress, and therefore much of the response is due to increasing plant populations and seeding rates.
Is there a recommendation then as to whether or not a farmer should increase his or her seed population, seeding rate?
Well, if we look at the USDA averages and we look at the research averages in Nebraska, there probably is an incentive to increase seeding rates somewhat. Most of the Nebraska research would show that we do not get the responses to really high seeding rates that's obtained in the eastern corn belt. So most of our research, both on station and on farm research, would suggest in high yield irrigated environments about 34,000 seeds per acre to be on average appropriate. Obviously, if a farmer is producing extremely high yields, well above 200 bushels per acre, then a bump in seeding rate is probably justified. There seems to be a direct relationship between the expected yield potential, and desired seeding rates.
Finally, though, increasing seeding rate could bring some problems like lodging. How big of a problem could that be?
That's going to again be very variable from one year to the next and one environmental conditions to the other, and very hybrid dependent as well. Certainly as we increase plant populations and seeding rates, plants get taller, stalks get thinner, and they are more susceptible to potential for lodging to occur. Obviously, lodging is not going to occur if we don't have wind and some of those kinds of events, so it all becomes dependent upon a very complex interaction of factors.
For more information, you can visit the Market Journal website, where we've linked to a NEB guide on row spacing and seeding rate recommendations for corn in Nebraska. Next week, we'll look at the importance of soybean planting dates with UNL Extension agronomist Roger Elmore. Now, with this week's weather forecast, here's UNL Extension State Climatologist Al Dutcher.
Well, folks, here we are again for the weekly forecast. Before we get to the main forecast, just a brief summary of this past week. We've had several waves of energy move through the state. Last week we talked about 2 potential systems, and actually we had 4 waves move through the state. So the models are doing a very poor job once we get about 2 to 3 days into the forecast of performance. And this has been this case for the last 3 weeks, and I suspect as we look at this forecast going forward, the same type of pattern will materialize as we look at this storm coming in the early part of the week. There's various solutions, anywhere from 3 consecutive days of precipitation to 1 single large event. And so there's a lot of uncertainty going forward. But the one thing we do note is that we had our first taste of severe weather. We're in close proximity to Nebraska with a tornado watch issued in northeastern portions of Kansas and western portions of Missouri during the Thursday time frame, as we've seen that precipitation shield moved across the state. And in its wake, of course, we've seen the wind, and before it, we've seen some excessive winds. And now we're starting to see the results of the trough building into the eastern United States with a ridging pattern taking place for this week, and that should bring some nice weather. So let's take a look at the upper models and see how the system will progress. So here's this trough that's moved through over the last 24 hours. In its wake, we're starting to get nice ridging of high pressure building in. That should warm our temperatures up dramatically from yesterday, and we have a piece of energy that's starting to approach the western United States. It's expected to move into the central Rockies as we get into tomorrow, and that will start to approach western Nebraska as we get into tomorrow evening, and then it will start to move its way into southern Minnesota as we get into the day on Monday, which should generate some precipitation on the backside across northern Nebraska and western Nebraska in the form of either rain or snow, and lighter chances of precipitation in southeast Nebraska. So as we get into Monday, here's this system. It's going to bring a little bit of a cool fetch in, so it's probably going to be fairly cloudy across a good portion of the state during Monday, and yet another system starts to approach from the western United States, and that energy will start to move into the central Rockies as we get into Tuesday, and that first piece of energy comes through with this big trough, will generate the chance for precipitation across northern Nebraska in the form of rain or snow. In southeast Nebraska and southern Nebraska, we may be more rain and possibly isolated thunderstorm activity. More importantly, as we get into Wednesday, the first system moves through, and then we have the broad-based upper air trough starting to push its way through. So we might start to see some of this energy wrap around and start to hit more of southeastern Nebraska with another chance of severe thunderstorms or potentially general rainfall. Now as we get into Thursday, most of the systems pass to the east or to the south, and we start to see high pressure building up over the northern Rockies, bringing much warmer conditions, and that sits supplantly right over top of the central plains as we get into Friday. So let's take a look at the temperatures. Right now it looks like the warmest temperatures this weekend with some really nice conditions out there. Then we get into some inclement weather for the Monday through Wednesday time period before we start to see a gradual warm up to the week's end. Looking out from next Thursday to the following Tuesday, we're looking at a below normal temperature trend across the eastern United States, and in terms of precipitation, it does look like drier conditions for that 4 to 5 day period.
Thanks, Al. Today's interviews with Mike Briggs, John Meuret, Jim Jansen, and Steve Mason are available on the Market Journal website and through our mobile app as part of the March 28th episode. Next week, Roy Smith will be our marketing analyst. Dennis Conley will look at ethanol margins, and Roger Elmore will discuss the importance of soybean planting dates. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Facebook and Twitter. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up. Market Journal is produced by the University of Nebraska-Lincoln Extension, where you can know how, know now. Funding for Market Journal is provided by the Nebraska Soybean Board.
America's export of soybeans helps the U.S. maintain a positive agricultural trade balance. Nebraska contributes half of its soybeans for export. The protein and oil content in soybeans enhance the growing demand for higher protein diets. The Nebraska Soybean Board promotes research to develop new soybean varieties with higher protein and oil content for major agricultural markets. The Nebraska Soybean Checkoff, growing opportunity from the ground up.